start. So first and foremost, thank you everyone for coming and joining. Today we have a webinar by one of our community members, DayTrader21, who is the third place winner of the Dukascopy Article Contest. Today he will be giving us a gold market outlook as well as yen bear market. So he'll just give his own expertise and of course, first, I'd just like to congratulate you on receiving third place in the article contest, and feel free to start the webinar.
Okay, thank you, Gita. And hello everyone who attended this webinar. In today's webinar, I'm going to look over the gold market, and in the second part, we will have a look into the yen market as well. More precisely, we are going to look over the USD Japanese yen pair. So let's first start to look over the gold daily price. I'm trying to zoom it here. This is a chart of gold daily price. We know that gold has been selling off quite hard this year on market expectation that the Fed will begin taper this year and to put an end to the quantitative easing program of bond buying. The gold price has benefited massively from this Fed market policy that has kept interest rates near zero, and what basically has done QE has done is to weaken the dollar and at the same time to increase the risk of inflation. So we know that the gold price and the dollar usually move in the opposite direction. So as the dollar, we saw the dollar went down, and at the same time gold moving to the upside. Also, if you look on the daily chart in June here, in June we have a massive sell-off. This sell-off started just when the taper talk hit the market, and also if we look, let's look on the seasonality chart here. We can see here that also in June, usually gold in the summer period doesn't do well. We can see here in June, July, and August basically are the worst month for the gold price. Basically, the price, the average price return in June was, as it can be seen here, in June was almost minus 0.8%. So we had at the same time we had the taper talk hit the market, and also we had our confirmation that in June gold doesn't do so well. So that's why we had this two correlation going side by side. So it was a high expectation for the market to not to behave quite well in the summer. So, but recently, if you look recently at the fundamentals, we can see that the new Fed chairman Yellen is a strong QE supporter. So this should start boost gold price, and it's very supportive for a gold rally. So I'm expecting in the coming days gold to rally. If you look also in November here on the seasonality return, gold price return, we can see that November is the second best month after October. We can see that in November price return is almost around 4%. So although if we look on the daily chart right now, you can see that we are pretty much down this month. So we have to pick up a lot in order to respect the seasonality of price return, because right now we are already halfway through the month, so we only have only one half away to go. So price must here the momentum must start pick up, and I'm expecting a quite dramatic move to the upside in the coming days, and starting from beginning of this week. So in the next days, I'm looking for momentum to pick to the upside. So basically, these are the fundamentals. The fundamentals are that the taper talks are fading away. So these are very good for gold rally. And also the seasonality price return of price of gold is very high in November. We can see that basically. Let's look on this continuous chart here. Let me bring the gold future continuous chart. We can see here, as I said, in June started the Fed taper talk. We could see here that starting from the June, the market doesn't behave so well here. Here is beginning of June. We have a strong sell-off, and also if you look, although here we had a pick up here in July, but yet we finished still negative here for the July month, and also going through August also we made here even lower in the price gold return. Only starting from beginning of autumn, from September, we can see a massive dramatic rise in the gold price. We can see here that price of gold is increasing very dramatically during the autumn months. So also we can see a lot here in October. We can see a bounce back. So in October gold doesn't do so well, and from beginning of November we can see that gold price should raise dramatically. As I said, November is the second best month for gold, but so far the gold market hasn't behaved so well. So that's why I said that the momentums need to start to pick up in order to respect these seasonality charts, because we are quite behind. We are, for the month, I think for the current November month, we are still negative for the gold. Price return on gold is negative, so we should wait and see what will happen in the next weeks, next days, and we should see momentum to start to pick up. So that's it about the fundamentals about gold. So now I am going to bring to your attention two charts that will speak technically here about these two charts. Let me zoom in. Okay, here is a market analog. Here to the upside we can see the recent market reaction, and here to the downside we can see how gold behaved during the 1918 through 2001. We can see here a similarity between these two charts. Basically this is a fractal. A fractal are typically self-similar patterns. Fractal may be exactly the same at every scale, or they may be nearly the same at the different scale. So here we can see that after we broke here this massive support here, we have begin ranging, and here is the same. We broke this support, went to the downside here, and we can see this low must coincide with this low from here. So in order for this analog to be correct, current market must not exceed the current low. So unless this low is still valid, we should still proceed in following this model from 1980 to 2001. So only if this low is taken out, only then the correlation is broken. So until then, I'm still going to watch the price action and wait for gold price to rally. So that's why I said that I'm expecting to see a dramatic increase in gold price. So basically we had the fundamentals with us, we had the taper talks fading away. We know that Yellen is the new Fed chairman, is a strong supporter of quantitative easing program. We have the seasonality chart price return for November, which is quite strong. So this suggests that gold price should raise quite dramatically. And also we had the technicals here. We had these fractals, these self-similar patterns here that can guide us to see the future, basically to see how the market will behave next. Also, if you, I remember that I don't know how many of you have seen Paul Tudor Jones documentary. In that documentary, you can see that he has used this kind of fractals or market analogs in predicting the 1987 market crash. He used the 1929 crash to predict the 1987 crash. So I am a firm believer in these self-similar patterns and their powerful meaning to the market. So that's why I'm paying attention to this analog and expecting to see gold increase in the next months. Also here, let me show you the average price gold return. Okay, basically these start from beginning when the Bretton Woods system ended. We know that the Bretton Woods system ended in 1917. So we can see here, historically speaking, how the gold market has behaved. We can see here that the starting from 2001 here. Let me show you 2001 here. Price begin the secular bull market. I still believe that the secular bull market has not ended yet. These cycles can last for everywhere between 10 years to 25 years. So I'm still expecting, although as you can see, this year is pretty much way off the highs that we have seen last years. I'm still expecting the price to pick up, but not expecting to see anything above this level that we had last year. But still, I am looking for 200, 300, or even 400 dollar move in the gold price. So we will have to wait and see what the market will bring to us. Let's see if there are any questions here. I'm reading the chat right now to see what everyone is saying. I see that Metal Mind is thinking that the gold, it will break lower. He's saying gold will break lower. Well, we will have to wait and see. The market will show us its way. I take in account the stock market rally and all. Yes, but if you look at the stock market, yes, stock market this year has been rallying with gold declining. Yes, you're right. Yes, but current market theme, if you look at the fundamentals, you will know that Yellen, the new Fed chairman, is quite a strong supporter of QE. So she maybe shocked the market to continue even for the next 2 years to not end the QE. So, you know, in September when they shocked the market by not cutting back the QE program, everybody was expecting the QE to start fade away. So they shocked the market, but by not doing it. So we can see in reverse this taking place in the market. Okay, so okay. Now that we had okay, next topic, as I said in the introduction, we will look into the yen market as well. More precisely, we are going to analyze USD Japanese yen. Let me bring the chart here on the whiteboard. Okay, first let's look into the fundamentals. We know that currently the yen pair is all about the Abenomics market policy. The Abenomics effect had a dramatic impact on Japan economy, strengthening the consumer confidence and also stock market was rallying, real estate prices are also raising, and retail sales also are raising. So we can say that the Abenomics policy have been quite a success so far. So that's the reason, the main reason why the USD Japanese yen has been weakening this year, and also this weakening started from the end of the last year. The yen has already just this year alone, yen is already down I think 30%. And if you take in consideration the movement that started from November last year, I think it's almost, the yen is down almost 30%. If you are trading the market, you can see here that I bring to the table many Nikkei charts, because if you are trading, if you are a forex trader and are trading only the foreign exchange market, you must take in consideration and to look to the other market like the stock market or the interest rates market, which are having a big impact on the forex exchange fluctuation. The world is much more complex and everything is interconnected. So that's the reason why we will have a look to the Nikkei index, which is a stock market index for the Tokyo Stock Exchange. So we know that in order for yen to go down, Nikkei, the Nikkei must go up. Here is the current Nikkei chart. Here we can see here the Nikkei chart. Here we broke to the upside. We broke to the upside at the same time. And here, if you look on the daily chart on Japanese yen, also here, we can see that this move coincides with the move when we broke this triangle. We can see here on the daily chart on the USD Japanese yen a huge triangle chart, which is a corrective pattern. So most likely every time these corrective patterns breaks out in the direction of the general move. So that's why we had here the break to the upside here. You can see we broke to the upside. At the same time, Nikkei, we had the confirmation, Nikkei moving to the upside. So we know that the current move in USD Japanese yen is a genuine move, because we had here in the yen, in the Nikkei, here in the Nikkei, also the break into the upside. So this is also a confirmation that this move will have more legs to the upside. Also here, also I'm looking at fractals as well. The same as we looked at the fractal on the gold chart, we will be looking on the yen as well. Here, what you see to the downside is the market action that started from here. It's 1988 through 1919. Basically, it's the same. Is a self-similar pattern with what happened to in our days here. If you compare these two charts, we can see self-similar pattern. So after here, we can see here after we broke this triangle, we have seen a massive upside move. And also here, I am expecting the same thing to happen here. We already had here a breakout, come back, retest, and then push strong to the upside here. So that's what we should expect for the next month to happen in the Japanese yen. Also, we have to keep in mind the fundamentals that we have spoken previously, that the Abenomics policy are very supportive for yen weakening even more. So this should keep yen on pressure for the time being. Also here, I'm bringing you to your attention USD Japanese yen 60.5-year cycle low. You can see, although we have moved quite a lot this here, you can see that this is a monthly chart. So this move is quite a strong move that we had here. But if you look on the bigger scale, we can see that we can still have further space to move to the upside. You can see that every 60.5 year we had a low. Here we had a low. Then again we had another 60.5 year cycle low here. Then again here another low. So for the next 60.5 year cycle, I'm expecting the same price to behave the same as we behave in these circumstances. So here I'm still expecting price to push higher to the upside, to have a strong rally, and then a strong collapse again to the downside. So that's why this chart is favoring further move to the upside. So as we can see, we had the fundamentals also with us and also the technicals with us. Having both the technicals and the fundamentals, it gives you a strong ground to make a trade, so you can have more conviction making your trades, having both fundamentals and technicals in your favor. So that's why I always try not to look on just to technical alone or only fundamental alone. I try to look at both of them. Sometimes I make a trade just on technical alone, other times only on fundamentals alone, other times is a combination of those. But I think when you have both the technicals and the fundamentals in your favor, then you are about to make a big trade. So you can see that both in in our gold trade and on the USD Japanese yen trade, in both trades we have both the technicals and fundamentals. So we will have to wait and see if these will actually materialize in a profit, because to be quite honest, everything can change, because market is very susceptible to every hint from the central bank. So we have to look carefully to what the central bank around the world are doing. So because if, let's say, take in consideration, if the Fed will start taper from next year, then the picture of course will change. It will be supportive for the dollar to rally even further, but it will be negative for the gold price. So, but I still believe that the QE program will still be going on, and we will not see the Fed stop the bond buying program anytime soon. Although many analysts and market specialist says that Fed will start taper from next year. I don't think that will be the case, but that is just my personal opinion. I think that Yellen, which has shown to us that she is very supportive for the QE program, I don't think she will stop the program anytime soon. Okay, I see I have 2 minutes left. I have one more chart here with the Nikkei. Yes, here. Here is the what Nikkei did in 1989 through 1919. You can see here. So if you compare this chart with the, let's see, where is the Nikkei for current? Here is. If you compare these two charts here, this is the current Nikkei chart here. You can see we broke here to the upside, and if you translate it with what happened in the 1980s, we can see here that the market model suggests still a strong push to the upside before any correction. You can see here a strong push, and this strong push should help USD Japanese yen to rally, because as I said, yen must weaken at the same time when the Nikkei should rally. So we have to have both of them working together for us. Okay, I see my time is already gone, so that's it for to me. Okay, Gita, thank you for letting me
Thank you
doing
very
this.
much, DayTrader, for your wonderful presentation. I hope everyone learned something new, and all the best to you, and more webinars, hopefully, from you in the future.
Okay.
Thank you.
Bye
Bye-bye.
everyone, and thank you. Bye bye.